Welcome to the Delaware Mortgage Rate Weekly Update for the week of April 2nd, 2012. Hello, I'm John Thomas with Primary Residential Mortgage here to give you your update. So if we look at the bond page, the bond did recover last week from selling off for the last 3 weeks. We're going to take a look at that. But first, the big report that came out last week was personal income and spending came in close to expectations. While that's good news, there is one negative in the report when we dig deep. And that is something considered as the inflation-adjusted income. As you can see in the chart right there, personal income rose by 0.2%, but after factoring in the 0.3% rise in headline personal consumption, expenditures, which include energy and food, income actually declined by 1%. We have seen incomes actually decline on the inflation-adjusted basis 3 of the past 4 months. The rise in fuel prices is a big culprit for the negative trend, and it highlights how oil prices can be a detriment to the economy. In addition, the final reading of the fourth quarter gross domestic product for 2011 remained at 3%. A decent number, however, for 2011, overall GDP or gross domestic product was very low at 1.625%, well below the number needed for a normal functioning economy. Okay, 3 factors combined with recent weak data from the housing sector and a discouraging bounce higher in last week's initial jobless claim report are all the reasons that can make the Federal Reserve considering doing another round of bond buying, which is called quantitative easing. So this would be QE3. Now, home loan prices are tied to mortgage rates. So last week we did see mortgage bonds improve as they were trending higher and higher, and then last week they actually started to improve as the bonds started to increase. What happened was the European crisis resurfaced front and center last week in the news as the credit agency Standard & Poor's that Greece may have to restructure their debt once again. Plus there's news out of Spain that the GDP is already contracting. The country's grappling with a 23% unemployment rate. So those are things we have to watch. Now if we go to the bond page itself, if you look at the bond page, you can see that for the last week we reversed that downward trend when the bond was selling off, which meant rates were getting higher. And you can see last week we started a nice trend upward, so rates started to move lower again. But if you look, there's a falling red trend line, which technically is going to be a tough barrier to break through. So it could hit that and start to bounce lower again, which means rates could reverse course. Now, what's in the local news? We've got the free first-time homebuyer seminar coming up Saturday, April 21st in Newark. 2 sessions, 10 a.m. to noon, 1 p.m. to 3. And then again in Dover, the Sheraton in Dover, on Route 13 on Tuesday night, Tuesday, April 24th from 6:30 to 8:30. You can register for either seminar. Call on 302-703-0727, or you can register online, DelawareHomebuyerSeminar.com, DelawareHomebuyerSeminar.com. What we're going to do is recommend floating your Delaware mortgage rate for starting off today to see if the market can keep that upward trend. But be careful as we approach that trend line. We may recommend locking because we may bounce lower again, means rates going to go higher. If you have questions or need help or would like a free mortgage planning consultation, give us a call in the office, 302-703-0727, or you can apply online, www.prmidelaware.com. I'll see you guys next week.